U.S. President Trump continuing to ramp up pressure on China, ordering a probe into critical mineral imports. China is one of the top global producers of a majority of these critical minerals, and Trump's order says America's dependence on those minerals creates risks related to national security and defense. It also comes after America brought up 245% as the tariff rate on Chinese products in the so-called fact sheet, the White House blaming it on China's retaliation to U.S. tariffs and saying it was a cumulative rate of several products, specific levies already on the table. And when asked about it, China's foreign ministry spokesperson said, quote, "You can ask the U.S. side for the specific tax rate figure." China also issuing a note to the United Nations Security Council, convening a meeting next week to discuss America's tariff strategy, accusing it of weaponizing tariffs and casting a shadow on efforts global peace and development. Meantime, the World Trade Organization warning the global trade war would lead to a drop in trade volumes this year, now expecting a contraction of 0.2% versus a 3% expansion before. The WTO also warning trade between U.S. and China would shrink.
We currently estimate that merchandise trade between the two economies will fall by 81%, a drop that would have reached 91% without recent exemptions for products such as smartphones. So without the smartphones, 91%, with that exemption, 81%. And this level of a drop in U.S.-China trade of the magnitudes we are talking about is virtually tantamount to a decoupling of the two economies.
Wall Street finishing the day lower as the tariff uncertainty continues to be the overriding theme in the markets. We also heard from Fed Chair Jay Powell, who said tariffs would have an inflationary impact, but that the central bank is not inclined yet to just step in just yet and is still in wait-and-see mode.
We are well positioned to wait for greater clarity before considering any adjustments to our policy stance. We continue to analyze the incoming data, the evolving outlook, and the balance of risks. We understand that elevated levels of unemployment or inflation can be damaging and painful for communities, families, and businesses. We will continue to do everything we can to achieve our maximum employment and price stability goals.